Hey guys, welcome to another video. Today we're talking about Romeo Power, ticker RMO. Now that's the video format. I will introduce the company and the business model, I will talk about the financial data, talk about valuation, and finally I'm gonna give my point of view, my conclusion about everything. Now of course this is solely my opinion, so always do your own research. Without further ado, let's start with the video. Now we've all seen the EV market is booming and we see more companies showing up, companies that offer products such as cars and batteries and companies that offer services such as charging solutions. And now there is Romeo that is being publicly traded as for a couple of months from now, resulting from a reverse merger with a SPAC company. Now, at this moment, they are $10 per share and around $1.4 billion, which I think is a good price, and I'm going to explain exactly why. So let's start from the very beginning. What do they offer? Their main product is battery for medium duty short haul trucks. We have heavy duty long haul trucks and specialty trucks and buses. Okay, so they manufacture batteries for heavy duty cars. Now, as they describe it, highest performing system on the market today. Our engineers have pushed the limits on lithium technology to bring you a faster and more energy efficient EV battery. Get technology leading lithium battery solutions that charge faster, go further, and last longer thanks to our game-changing advanced in R&D with energy density up to 30% higher than the rest. Now, that's what they highlight the most. I went through the website and there are two things they highlight, which is the battery management system and higher density. Now, on top of that, they explain the importance of keeping the battery at the right temperature. At the moment, they have production facility that is located in South California, and they are manufacturing batteries for EV since 2015. Now, I always look on the leadership team, and over here we have Mr. Patterson, which is a serial entrepreneur. You can read it over here. So this is not his first startup. Now, at the moment, they have 25% institutional holdings, and insiders hold around 10% of the equity, which is also important to understand because it gives you some kind of a sense what big investors think about this company. Now, they have managed to reach some milestones since their foundation. First of them, they managed to sign a $540 million contract. Not all the revenue will be delivered this year. It's going to take 5 years. In addition, they say they have $2.2 billion of contracts under advanced negotiations. So I think we can take this line, and I don't believe that a company would fabricate something like that because it's really black and white and there is no really a room for question. So we know in the next 5 years they're going to proceed around $500 million and they have another $2.2 billion in the pipeline. Now over here there is some important valuation metrics that we should consider. Before they went public, their pre-money equity valuation was $900 million, which means they worth $900 million before they turned into a public company. Now, after they got an investment from RMG Acquisition Corp, which is a SPAC company, they received an additional $350 million, and they say the post-money equity value is $1.3 billion, which means that when they went public through the SPAC, they worth around $1.3 billion. Now, as you can see, at the moment, they worth $1.4 billion, which is a bit above their post-money valuation. Now, just the fact that they're close to their post-money valuation doesn't mean they're not expensive. But let's jump to some numbers that can show us, or at least give us a story and understand whether this company should be considered expensive at the moment or not. So that's the guidance over here. And we can see that in 2020, they've sold $5 million. Now in this year, they're expected to proceed to recognize $134 million of revenue in this year. Now, usually, it's not an exact number, but usually, an EV company, most of the companies are traded at around 10x of their sales. Usually it's the next 12 months sales. Now next year they're supposed to sell $400 million, and if we're gonna multiply it by 10, it should bring us to around $4 billion of market value. Now I think those numbers are reasonable, which means there is a scenario that next year they're gonna be worth around $4 billion, which is 3 times this number. Now they have some well-recognized customers such as Nikola, Lighting System, the Lion Electric Corporation. Those three are signed customers already that expected to pay around $500 million in the following 5 years, which as and I mentioned that before, all those contracts came from Nikola, Lighting System, and the Lion Electric Corporation. Now, if we're going to talk about competition, I think that Tesla, QuantumScape, and Envy should be considered as competitors for Romeo Power because those companies manufacture batteries as well. Now, those numbers over here as well tell us that they're going to have a gross loss in this year and maybe next year. Who knows? Might happen. But basically, what it tells us that as for this moment, they will fund their operations not through the revenue. They will need an outsourced funds, which means they are going to reach to the capital markets once again, probably next year, probably the year after, and this is completely natural for a young company. So they either sell more stocks, and that will be dilution for current shareholders, or they're gonna get they borrow some money, and that gonna increase the company risk profile. Now, to sum things up, the story goes like that. Romeo is a battery manufacturer that focuses on heavy vehicles such as trucks. They claim to have better technology than others, and by that they manage to provide better range relative to the price they demand. Now, it's important to mention that their customers are, of course, OEMs, which means those are other manufacturers that manufacture heavy-duty cars. Also, they say it will take them around 3 to 4 years to become a $1 billion revenue company, and we've seen it a minute ago. I personally think they will become a $1 billion revenue company, and I'm gonna explain why in a second. Now, I've mentioned before that they're trading at 10x their price to their expected sales in this year, 2021, and I think a ratio of 10 is still relatively to other companies in the market. It can be considered as not expensive. I do think they're a good investment at the moment, but the story they are telling us about the competitive advantage, I don't really buy it, and that's my problem at the moment. They say they can give a better density, and they say basically that you get a better value on your money. And I personally can't tell. I've tried to look on other companies, and everybody say basically the same. Everybody say I'm better. But for me, it's really hard to tell who's better, and I can't see some kind of competitive advantage related to the quality of the product at this period of time. Even though I don't see a competitive advantage, because I think their valuation is okay, and I think they will manage to sell how much they say they will sell. So my conclusion is as follows. The company can be considered as a solid investment for long-term holdings, but not because their product is special. It's because the market share they are competing over worth around $200 billion. And that's enough if they will manage to sell even 1/10 of 1% to get the revenue up to $200 million. And that's their target to 2021. So I think this company have a nice upside considering their price. But again, that's only my opinion and I might be wrong. So always make your own research. Thank you for joining me today and I will see you in the next video.